Hello and good morning, good afternoon, or good evening, and welcome to an open discussion on technical analysis. My name is Brian Kahn. You have my email there. You have the dailyforextradingedge.com, which is the IBFX collaboration page with different analysis, where I posted three market commentaries there already this week, and today was an exciting one, especially given all the action that we had in the markets, which we can talk about a little bit this evening. And then you have my website, jupiterpeakfinancial.com, where you can find more commentary that I provide and other links as well, and information on what I do when working with traders and investors. So let's just go through this, as always, the brief disclaimer. I'll leave this up for just a few moments. And the volatile markets disclaimer, as we had today with big trading ranges. In volatile or fast-moving market conditions, stock and conditional orders become market orders to be filled at the prevailing price, which may be vastly different from the desired price. Stop loss or conditional orders do not always guarantee a fill, and such orders may not be filled as placed. Substantial losses may still occur. So before I go into the outline of where we're going tonight, as always, please go ahead and type in your questions into that questions field. You have to type them in manually, and then I'll see them as they pop up. Again, the title tonight is an open discussion, so feel free to start to type in those questions, and I'll check back every now and then on the panel, and I will answer those throughout the webinar. So fundamental analysis, we got a bit of that analysis today in a big way, and we'll talk about that. Macro and micro events, and then technical analysis, intermarket relationships, what's working for you as far as other markets that are helping you trade, depending if you're a short-term trader or a position trader in the Forex markets. And then the open discussion, the main part of tonight's webinar, discussion on technical analysis, key trend indicators that I use, key range-bound indicators that I use, and key technical patterns. And then again, as always, at the end, we'll do a quick review and give you a page that gives you various links to go ahead and keep up on your fundamental and technical analysis, as well as trading psychology. So fundamental analysis, again, I cannot stress the importance of that analysis. We know that we got a big announcement today out of Ben Bernanke. As one of the questions he was asked, it turned into an answer that could finally end or get close to the end of accommodative policy here in the United States, at least as far as what the Federal Reserve has been providing. So those drove markets today because it was an interest rate talk, and obviously that drives the bond markets in the U.S., and that obviously drives the interest rates, one currency pair versus another. So we were able to see the U.S. dollar strengthen today, and we'll show you that. So your broker provides great analysis on the fundamentals via webinars like this, the daily market commentary through the Daily Forex Trading Edge page. So make sure you're taking advantage of what IBFX has to offer as far as the different analysis that they provide. And then forexfactory.com, a great way to stay on top of upcoming events. And obviously you should be aware of upcoming events and what I mean by macro and micro events. Macro would be central banks and talking like Bernanke, and micro would be durable goods or consumer confidence or labor data, inflation data, stuff like that. How do you stay on top of that? You have CNBC or some global television channels such as Bloomberg, and you have other market sites as well. So I'll switch the screen here for just a second, and I'll take you over to take you over to the internet here, if I can find the right tab. And so on my website here, you have a link to the economic calendar. You also have it through IBFX, but this is the calendar right here. And again, today, this is for the week. So Wednesday today, we had Federal Chairman Bernanke testifying here. So he spoke, but also don't get lost with some of the micro data, because what he said today was so important. He said ongoing analysis of economic data will be very, very important, because that's going to help us decide if we need to start to end this accommodative stance. So pay attention to information like tomorrow. We have unemployment claims. That's information on the jobs picture in the United States. And then capital spending, durable goods, big ticket items that last 2-3 years or more. So just make sure that you stay on top of that economic calendar. So sliding back into here, that's the fundamental analysis piece and the importance of it. Technical analysis, again, we're going to go deeper into it, but key topics, trends, which way is the money flowing, support, where they're buying, resistance, where they're selling, and intermarket relationships. What can you use as far as a different market, like the bond market? What can you maybe, if you're using the gold market to help you with the Australian currency, or the oil market to help you with the Canadian currency? What relationships are there? Relationships between the equity prices and certain foreign currency pairs and the direction of them. What can you use to help you get a trading edge? So an edge is basically not a guarantee. An edge is, I believe this happening over here should make this happen. I go and create a trading plan using fundamentals and technicals, and I have my risk reward built in. I trade the appropriate size for my specific account and that specific time frame, because a short-term trader trades a different amount of contract maybe than a longer-term trader, and they have different parameters. But the point is, it's all done before you enter the trade, and then you're monitoring it, and you kind of have your flow chart. If this and this happens, I'm doing this, I'm moving my stop up, whatever it may be, I'm legging out. If this happens, I might be getting out of the trade altogether. So keep that in mind as we go into technical analysis tonight. It's really a great way to give us risk-reward parameters. So let's see if there are any questions that pop up just yet. All right, so I'm just checking in also on the audio panel to make sure that the sound's good. So you should be hearing me pretty clearly. If any of you that are on tonight can't hear me, please go ahead and type along, but should be pretty clear tonight. So technical analysis, again, do not forget about the macro fundamentals. When I wrote my daily market commentary, not today but yesterday, my last line was, do not forget about fundamental analysis. And then all of a sudden today, we had that big, huge fundamental event with the news from the central bank, from Ben Bernanke's testimony. So combine fundamental analysis and technical analysis, combine the two to create trading plans. So these are some key indicators that are pretty widely used, and so I'm just giving them out as a suggestion. Again, not the holy grail, no guarantees, but just something to think about. So trending indicators. When you have trending markets, moving averages help you a lot in trending markets. When you have trending markets, Fibonacci retracements help you because you have a trending market that now retraces, and you're looking to see how much it's retraced and see if you want to get back on with the original trend at a decent retracement. We've had a trending market in the equity markets, but we're going to see maybe if we can do some retracing. So I can bring that chart up in just a bit. And then range-bound indicators, just to throw out the few main ones. You have your MACD with histogram. So this one is an interesting one, because what is MACD made up of? It's made up of a moving average convergence divergence. So moving average, I just told you that trending indicators, moving averages are good. And then I turn around and I say the moving average convergence divergence, that's good for range-bound markets. So there are different ways to use the indicators. You just have to know how you're applying it. So I can't stress that enough. There are different ways to apply things. You have range-bound markets, and you can see the MACD with the histogram helps in range-bound markets, and stochastics below that helps in range-bound markets. But you can also use these range-bound indicators to try and tell you that a trend is changing direction. So there are different, more kind of a little bit of twists on these range-bound indicators. So some of you may have heard of bearish divergences or bullish divergences. So that's using a range-bound indicator in a trending market to help you see if it's changing. We might actually be able to apply that now that we have a trending market starting to change. Okay, so let's go into the markets. This is one page. This is enough for now. Let's go into the markets with these and kind of talk about trending markets or range-bound markets and see what we can find. So I'll actually start with, let's go ahead and switch the programs here. And just to show you a trending market, here's the S&P, the equity markets in the U.S. And they've been trending up and up and up. And you can actually see a nice trend line and look at this huge move. We fell off the trend line, and then we came racing back to it. A huge, huge, huge move here from in the last month, from the middle of April to the middle of May, and we held that trend line again. We bounced off it Monday, we bounced off it Tuesday, we barely went above it today, and then we went back down. So a lot of people might be keeping an eye on that. So we can go ahead and you can throw on various indicators, and you can see kind of what I'm talking about. So one indicator that I was thinking about was, hey, we've had a nice trend. What if it starts to retrace? Where can I start to see some points? So here's my Fibonacci, and again, this is another platform. This is the sister company to IBFX. This is TradeStation. So if I go to my just price retracement lines, and I start down here at the beginning of this big move, and I draw it all the way up to the top, I can just kind of get a sense of where would I be interested maybe in being a buyer if, in fact, the equity market started to retrace on this fundamental data. So you can see here that 23%, 38%, 50%, again, not a holy grail, but it just gives me some guideline to say, hey, I believe that the stock market is strong in going up because of Ben Bernanke and central banks around the world. And he didn't say anything was changing. He said things could change down the road. But if the equity markets come off and he's still giving accommodative policy, well, then maybe buying a dip in a uptrend is a good thing. So I can say, hey, I'm interested in buying the 23% dip or the 38% dip or the 58% dip. I can line it up maybe with a moving average as well. So again, it just depends on what you're using. But for a trending market like this, I have a trend line showing me resistance, and then I have an area where it could fall down to, but I want to line that up with a technical pattern. Could I line it up with support down here? Can I line it up with support and a Fibonacci? Can I line it up with support, a Fibonacci retracement, and a moving average? The more moons that I have, the more excited I get to place that trade. The more reason I have to get excited about that location. Put an order in, put a stop below that in case it breaks support on the downside, and put a target on the upside and manage it. So this is just kind of projecting and seeing if we fall off. Remember, if we fall off today and then make a new high tomorrow or the next day or next week, I've got to redraw my Fibonacci line. So these might be null and void as we make higher highs, because until we start retracing, you can't use a Fibonacci retracement. All right. So that's a look at a Fibonacci retracement there on a trending market. So now I'm going to switch applications, and I'll move into the foreign currency markets, and this is the good old IBFX MetaTrader 4 platform that all of you are used to. And I kind of have my properties where I like to have the grid lines and the colors and things like that set up. So let's see if we can find a pair. Actually, you know what? There's a pair that just broke out today. Again, fundamental reason for a breakout to happen. If you've been watching the U.S. Canadian dollar, I wrote about this yesterday and today about how there was some resistance up in this area at the top. I can actually delete this Fibonacci as it's pretty old, and maybe it'd be more appropriate to put this horizontal trend line something like right around there. You know, these highs roughly in there, and then we broke out today, and we're kind of peaking up a little bit higher as far as Thursday goes in the Asian markets as they start their trading. But we definitely have had a trend up here as of late. Can't use Fibonacci retracements because it hasn't even started to retrace yet, but could I use moving averages? So I bring this down on a 4-hour chart, and I might even be able to bring it down on an hourly chart to see this. And I can definitely draw, I think, a trend line connecting the bottoms here. Okay, pretty nice to see that, right, guys? All right, it's not exact, but I just did it very quickly. And then I could also throw in a moving average, because this is a trend, and here it is. They actually really dumb it down for us, and that's great. That's what we want. We want our broker to help us. Trend. What indicators are helpful in a trend? Right here, moving average. And I'm going to put on a 20. I'll put on a 21. And it'll be in yellow. And there it is. There's my moving average. So how could I use this? Could I use this as support? If I understand the fundamentals that are driving the United States dollar stronger against the Canadian dollar, maybe it's because interest rates in the United States are starting to creep up. Maybe it's because something they said in Canada that they're ready to lower interest rates, whatever it is. I have to understand the fundamentals first behind the trend, and then I can use the line. And every time the price crosses above the moving average, I get in. So the price is crossed above the moving average here. You get in here around 100.27, and the price crosses back below, and I get out here at 100.65. The price crosses back above the yellow line here, 100.73, and it crosses back below it, and I exit here at 101.10. So I'm not saying when it crosses down below it I get short, because maybe I only want to be long because there's a fundamental reason to be long. So that's why it's so important to be the fundamentals. So in an uptrend, I usually want to be on the long side. I don't want to be shorting that uptrend because that's the wrong way to go. At some point, the trend will change. There'll be reversal pattern things where we're going. But right now, you can see that the trend is up, and the bigger moves have been to the upside, and buying at the moving average has been better than selling short at the moving average. Okay? So keep that in mind, that if you're using a trending indicator, you want to probably be going with the trend instead of against it. So jumping back into these slides, all right. So range bound I just went over the trending indicators, moving average and Fibonacci. Range bound indicators, you have your MACD with your histogram and your stochastics. So those are pretty easy to pop into place. And I'll jump back here to IBFX. And if we have we did have a range bound in this market on a bigger scale, but I'll try and find when it's been going sideways. I can't remember if it was the New Zealand, U.S. for a while. I can find, let's see. On the daily chart, it's a little bit better, but we've kind of sunk down a little bit. But again, this is a longer term. But here, oscillators, range-bound markets, oscillators. Here you go. MACD, which I talked about, and stochastic, and there obviously are others, relative strength index. But that's why you don't want too many indicators doing the same thing, or you don't want a moving average with a stochastic, or a MACD with a moving average, because sometimes they're not really working together that well. They're not meant to work well together. So here's I'll just keep the parameters how they're default. And here's your stochastic, and the idea is when the stochastic climbs up high, we go ahead and we get short or get out of the long, and when it gets down low, we get out of our shorts or just go long. So it's range bound here, and you can kind of see as it came down low below this dotted line, they're saying it's oversold and you get long. And then it comes up above here, this dotted line, and they're saying you can get short a little bit. So really you have to keep in mind, though, it's not enough just to use the stochastic. Use your resistance. So this red line right here was a whole bunch of resistance. So every time it hit the red line, you could say it's overbought and use the stochastic combined with it. So here's the next time it hit the red line. Here's your stochastic overbought. Here it hit the red line. Here it hit the red line. Here it hit the red line. So they line up pretty well. But even if you didn't use the indicator, or you tried to beat the indicator and get it a little bit earlier and better your risk reward, you could get short at the red line, put your stop above, your target below. Get short at the red line, put your stop above, get out below, put your short at here, enter the short at the red line, stop above, enter short at the red line, stop above. So there's a nice range-bound part to use your range-bound indicator, whether it's a MACD with a histogram or a stochastic or a relative strength index, anything you see here in the oscillator area, okay? All right, moving forward in the slides, we have technical patterns, continuation and reversal. So wedges and triangles for continuation patterns, and I've put here that we're seeing a lot of these in these current trending markets. Every time we have a big move up in the equity markets, we have a small little consolidation retracement, and then another big move up, so it makes that P formation, or that flag, that wedge, that triangle, and that's what you see in those continuation patterns that in trending markets. And then in reversal, again, are we looking for reversals to happen with trends? So going back to the charts, double tops, head and shoulders, using these creates proper risk-reward ratios. So let's quickly go back in here, and could we possibly, actually there's a good chart here, if I bring up an ETF such as gold that tracks gold prices, which might help you with the currency. Right here, a big trend down in gold prices, and then we bottomed, we went back up and we bottomed. Is this a double bottom? So are you buying down here? Because as of late, there have been people buying. Yes, it was very volatile today, a huge range, obviously with the news, but you don't have to trade the news. You don't have to trade volatile days like that. You can sit out or trade appropriately. But But the point is, right now we have support here and we have support here. So there's a double bottom. We don't know for sure, but your risk reward is limited because you get out below if it goes below support, and potentially it makes it that W pattern that we're so used to seeing out of double bottoms. And the idea is to get out for a gain here and here and here and here. So you might risk $2, $3, $4 to make $5, $6, $7, $8. That's a nice risk reward ratio. So double bottoms or double tops, triple bottoms, triple tops, head and shoulders, reverse head and shoulders, or inverse head and shoulders. Those are reversal patterns. I'm always looking for those. So if you're looking at the S&P, just going back to it, there is not a reversal pattern in here. We would need a double top to tell us that technically there's a reason to get short. Fundamentally, you might have a reason to get short because of the central bank, talking to you. But it's always nice to have a trend line to use where it's hitting resistance, or a double top, triple top, the head and shoulders, whatever technical pattern that you're looking for. So keep in mind that you don't have to guess. You can wait for technical patterns to set up to get you into a good trade with good risk reward parameters. All right. So I can't stress that enough as we wrap up here, that you should use these technical patterns to create proper risk to reward ratios. All right, not like a deer in headlights, not guessing, but you do them in advance and you look for them, you're prepared for them, you're looking at your watch list. If you're looking at stocks, you have whatever watch list fits your account size. If you're looking at the foreign currency pairs, depends on where you live around the world, but you have 6 to 8 to 10 pairs that probably makes sense for you. Not a lot to keep track of. You should be proactive and getting ready to put your orders in, knowing that it could be a limit order or a market order. In a fast market, there's no guarantee where you get filled. You put your stops and your targets. If you're a day trader, you manage it. You don't leave the screen without closing out that position. If you're a swing or longer term trader who you have a larger account, you might leave it on for a day or 2 or 3, depending on the economic calendar and things like that. You may not choose to leave on a trade when a central bank is speaking. So that's just where we're at with the markets right now. So don't forget about the fundamental events, the macro and micro events. Technical analysis, that was the main subject tonight. Indicators and patterns, but again, don't forget about those fundamentals. Combine that with technicals to make a good trading plan. Next webinar will be in a few weeks in June. We'll do the same fundamental analysis update. Technical analysis, we'll link some equity and Forex relationships. The main topic to be determined. If you have questions on, again, what I do at Jupiter Peak Financial and the consulting that I do, you can reach me at the email there. Take advantage of the great analysis that IBFX provides through their education page, through their collaboration page where I post almost every day, dailyforextradingedge.com. I have almost 40 videos probably that are recorded now on the IBFX YouTube page, so you can look there. And again, you know how to get a hold of me on my website, Jupiter Peak Financial. So thank you very much for attending tonight, and I look forward to you using the daily market commentary and seeing you in a few weeks on the next webinar. Have a great evening, or depending on where you are around the world, could be a start to your trading day. So happy trading.